To a lot of people, this Bitcoin move might not be much, but right now on this Bitcoin daily chart, a multi-year, multi-cycle indicator being broken by Bitcoin. Bitcoin closing a daily candle above that yellow line right around $17,100. And even while I do this video, a new green candle above the 50-day moving average. I want to talk about, even on the short term, what this means for Bitcoin and why it is so important on the macro long-term cycles of Bitcoin, why it is so important in terms of Bitcoin exiting this bear market. And all the while that this is happening, we have the 200 moving average that I want to discuss as Bitcoin potentially sets up its play to collide with that 200 moving average at key resistance. And that is the underlying sentiment that I have right now. It is to be careful. I want to discuss that. Before we break into those short-term charts for context, I just want to throw this out there, especially from a macro perspective. I mentioned be careful. I'm trying to be careful because let's remember, it's the 20-week moving average all the way up here around $35,000 that really defines and illustrates and gives us bullish confirmations from a macro perspective, meaning these macro shifts from bearish to bullish territory. It was back here in the last bear market, coming out of the last bear market, Bitcoin absolutely exploding back above the 20-week moving average. And then you can go all the way back to the bear market previously in 2015, Bitcoin exiting that 20-week moving average. So just note, that's the key macro area that we're anticipating. So these shorter term, mid-term moves that we see on Bitcoin, they're part of the larger reversal that we're all waiting for in the crypto markets, but it's that 20-week moving average where the real bullish confirmation comes into play, and that's likely months away from happening, but time will tell. So we're going to dig into this daily chart, and the thing that we're going to be really digging into, besides the 200 moving average on the daily, is the fact that Bitcoin right now is doing something very interesting compared to previous cycles. From that last swing low, the bear market low, to the bull market high that we're in, you all know we've been tracking this macro 786 retracement line. This is a huge area where Bitcoin has retraced to this time, as well as last bear market and the bear market previous to that. Bitcoin has bottomed below these areas. Now, I want to dig into the daily chart and discuss why this move is so big on the daily chart, because when we're looking at this Bitcoin daily move, we're seeing just this pop out of the 786 and above. And when we start looking and breaking down previous bear market cycles, I want to note something. You can see in the last cycle, and actually the first bear market cycle where we track this 786, you can see Bitcoin seeing resistance at the 786 line, coming back down, and actually trying once again and being rejected 2 more times, coming back down before finally exiting and breaking through that 786 and turning it into support. The last bear market, we have a very similar story. Bitcoin falling below the 786 line, that macro Fibonacci, up to it, resistance, almost another retest. Here's another retest, back down before finally breaking through it. These moves have been months in the making. These bottom ranges, they were months in the making when we look back and evaluate the bottom of the bear markets. Now, what's so interesting about this move is Bitcoin has not been hanging out below the 786 line for that long. Remember, it was just early November, just over a month ago, when Bitcoin entered into this bottom range. And not only that, the separation from the 786 to the downside, not even that great so far. And we see just from that 76 to a swing low, we saw maybe around almost a 10% move of separation. We know we have a cushion up to 35% to the downside. That would be a commonplace move for Bitcoin comparative to previous cycles. That's obviously still in play, but what's happening right now on these shorter term charts, as we watch Bitcoin kind of escape the 786 line, it's a big deal. The reason it's a big deal is because that 786 line creates such macro structure. So when we're looking to tell that story of cycle shifts, meaning we fall into the bear market and then we're exiting the bear market, the 786 line is the pivotal point for that, right? So we wait for Bitcoin to bottom below the 786 line to do its thing, like we've seen in previous bear markets. Here's 2015, here's 2018. But right now, Bitcoin already starting to test that pivotal shift. And that is key for Bitcoin. Now, all the while this is happening, I want to zoom out on the daily chart and just note something really important. If we're looking at Bitcoin on the daily, the last time the 200 moving average was tested came off of that swing high, which was the all-time high. Bitcoin fell, retested the 200 moving average. This was all the way back in March 2022. Bitcoin has not tested the 200-day moving average since then. The reason why this is relevant on the short-term charts is because of this. Right now, we're in this environment where Bitcoin very well could not only get further separation away from the 786 line that we've been discussing, but it could break this trend line of this triangle we've been tracking, as well as test this lower high Fibonacci retracement. On the shorter term, this retracement line is a big deal because we have this last swing high before falling below the 786, and then this lower high resistance sits right around 20,100 to around 19,100. Notice this would be just a continued lower high type of test for Bitcoin. We had a swing high back here in September to a swing low, and this last lower high was a Fibonacci retracement. So you see how these Fibonaccis play out over and over again. We can take this swing high to this swing low, and we can see Bitcoin just testing this lower high Fibonacci. So that is in play right now. The reason why that's so in play is because of this. It's because of headlines right now. The Fed, after raising interest rates by 75 basis points at 4 successive meetings, is widely expected to deliver a 50 basis point increase when its 2-day policy meeting concludes at 2 p.m. So this could be why Bitcoin is so far reacting in a positive way. This is potentially why we got this zoomed in move above the 786. But more importantly, going even into tomorrow, the main focus of Wednesday's meeting will be the Fed's quarterly dot plot, which shows where policymakers expect rates to be at the end of each year, and remarks by Chair Jerome Powell. So how are traditional equity markets going to react to this for the rest of this day and leading into tomorrow? How strong of a sentiment or narrative, positive narrative, will there be based off of today's meeting? I do this video just around 2 hours prior to the meeting itself, so anything goes. This video will be uploaded and we will see how Bitcoin interacts with this news amidst this short-term chart, namely this resistance area right now, this trend line, 18,400. Our market's so bullish that Bitcoin pops right above and starts testing this key lower high Fibonacci, all the while the 200-day moving average slowly getting pulled into that area. This is a huge macro test for Bitcoin on the short-term charts as we evaluate and watch what's happening on the macro. Remember, just because Bitcoin never made such a decisive move above the 786 line in previous cycles doesn't mean it couldn't do it now and then fall back below. It's something to be ready for as we anticipate resistance straight ahead for Bitcoin. To the upside from where Bitcoin is right now, it's a range of maybe 5 to 12% or so to the upside before Bitcoin hits massive resistance. What does Bitcoin do at that area? That's the biggest thing I'll be watching in the short term, especially as Bitcoin collides with this news of coming out of the Fed meeting. So let me know your thoughts below. I want to do a quick update video for you. I hope you're well. I'll see you in the next video. God bless.